Alright, let's get underway. It has been a few days since I last streamed. Let's see, this is the daily chart for Bitcoin. The last time I streamed was the 31st of December, I'm pretty sure. Let me double check that. I think it was the 31st. So it's basically been 31 days. We've had all of January so far. Not a hell of a lot has happened since the last stream. Well, there's a little bit, but we'll unpack it all. If I just go to the hourly chart and zoom out a touch, pretty much this is what has happened. We've come up, corrected that, higher low, up again, higher low, and then things started to fall apart. And now we're like, you know, down here, breaking down. So basically, at least on sort of the hourly or 4-hour time frame, we have been downtrending once more to break out of this rising wedge or flag, whichever way you want to cut it. And we'll sort of go into, I'm going to go into sort of how low this could go, or whether this bounce that we're currently getting is kind of worth tracking to see if it's going to come back up or where it's going to run into trouble, that kind of thing. I'm just kind of winging it. It's been a little while, as you know, since I streamed last, so I don't have a lot of things sort of like planned out, so it's going to be a little rough, but I'm just going to wing it. What's up, Anonymous? What's up, T-Black? When Lambo, yeah. Soon enough, Lamborghinis. Alright, let's go to the daily first. Oh, shit. Thank you, T-Black, with the super sticker. Appreciate it, bro. Alright, so we had our all-time high, downtrend. I'm starting to think that I should include a more of a macro pivot, because there's another trend that's forming as well on a higher time frame. And it's sort of this one here. Let me just lock this in. There is, because of this peak here, the all-time high peak, the pullback, the lower high, and then we're continuing to trend in that direction. I kind of feel like the Elliott wave guys are going to be like saying A, B, C perhaps. A, B, and then wherever C lands, that could be just like a corrective move off the all-time high before, you know, continuing higher. I don't know how long that's supposed to take. I'm not really an Elliott wave trader or analyst, but this could be a 5-wave move. You can sort of see the structures that formed in our bull market. I'm sure, like, yeah, we've gone through them, or I've gone through them many times on prior streams on this for the last 3 years. But I'm going to grab a completely clean chart, like just a blank slate. See if I can find one for Bitcoin. I've got some something somewhere. Alright, let's just use the Coinbase BTC USD chart. And let's do a bit of, like, I don't know, high time frame moving average analysis to begin with. So I'm going to go logarithmic because we're quite far out this time frame. And let's grab the 50 weekly SMA. So we'll hide the 200. Turn it back on logarithmic so you can see historically, basically DCAing into Bitcoin when Bitcoin gets below this moving average out on the weekly is a pretty decent methodology to go by. at least going by the history of every time Bitcoin's got below it, right? So just think of this, like when we lost it here, you could have started accumulating, like, you know, price falls, great, even better, you know, you're getting more bang for your buck. And it's what it's doing is it's putting you in preparation for when the swing up happens, and whatever average you may have had from all this buying is going to go up into profit, theoretically, right? Same here. This was the bear market last time, 2022. You could have DCA'd all of that, you know, whatever you can afford to do if you're planning on collecting Bitcoin. And then, yeah, once again, once that bear market is over and done with, you know, you get structure. There's a few key elements to it, like structure breaks back to the upside, like high time frame breaks. So yeah, that's my plan, at least for spot Bitcoin positions that I want to take into the next cycle. So that's going to be the sort of plan I go with. Now, if you see, let's compare last bear market with this one. I'll probably go back to linear for that, but it started off with a correction, a flag, another correction, another flag, and then it sort of just started to, you know, the corrections were less severe after that. Most of the leverage got wound out on the first and second correction, so there wasn't a whole lot left to drain from the leverage side of things and the, you know, the position side. So things started to get a lot weaker in the third and fourth major drops. But if we're comparing it anything similar to that, I think we've had the first one. We're probably currently working on the second drop now, which is like probably, at least going by last time, equally as severe. So if that's the case, what you can do is use a trend-based fib extension. So you start that from the beginning of the trend, take it down to the first drop point, pull it back to the pullback, and that gives you a measure, because we want to figure out if one is this length, what if we duplicate that length from the high, the lower high, which is here. Now a one-to-one move takes us to 52,200. We'll just round it to that, 52.2. So that is from this drop point. If we were to drop there, I don't know how long that's going to take, but if it does get that kind of severe level of drop, I think 52K could be on the cards. Now, another key structure that's, you know, very staring us in the face, it's pretty clear. It's just an old, like, support resistance level, and it's right here. Let's just draw that out, make it a little thicker of a line. Okay, so resistance, support, and basically the big question is, do we get in contact with this level? I think it's quite a strong suggestion that it will. That my opinion is that it will. I wouldn't be like, I would be more expecting some kind of at least local bounce off that level. Now that's basically $74,000. But I do think it produces a lower high once again, and it doesn't. It won't. I don't think it'll be enough to reverse the market. But that remains to be seen. So we'll find out in time. And then yeah, I think eventually it will continue down. Seems to be the trend, right? So the trend is definitely down. Now, some key points of structure that are still in play. Obviously, this line. This is like a pretty severe or a very important line in the sand. This 74,000. Probably heard me talk about it in previous, all the different streams I've done since this bounce point. Talking about this level. This is quite a macro level. Some might even have it drawn out to where it touches the old all-time high as well, and links up with that high. Show you what I mean by that. something more like this. So that point of support may come in sooner than just that horizontal. So if it sort of comes in anytime sooner, that could even just be like a 77k test or a 76.5, somewhere around that ballpark. So I would be yeah, look, I don't think it's harmful to be just averaging in. This is what I'm doing, in my opinion. Not financial advice, of course. I will never give financial advice on my YouTube channel or anywhere really. Ultimately, it's up to you to decide if it's if it matches your strategy or your outlook. But at least consider many opinions, really. Like, you know, do your homework, employ your own strategy. Well, let me just catch up with, there's a couple of comments in here. Oh, Choir says, Rick, what's the average percentage drop after losing the 50-week EMA in previous cycles? So we have some ideas on roughly what to expect in terms of percentage or SMA, whichever one you're using. All right, good question. So if we're talking like to the bottom of the market, from a performance perspective, once you lost the 50 here, that thing went down $33,000, which is going to be a different number because we're dropping from a different price. But percentage-wise, 68%, basically. Let's just hypothetically say that was the case once again, that we go down 68% from the drop point. 68. So 68 basically here. That is 32k, almost 33. So 32,750. Pretty significant drop. What does that put us on? You know what? That gives us a really, look at the level that it gives us. If we get that level, I mean, that would be amazing for buying. But look at the structure recheck that would give. You know, you've probably seen other people talk about like levels being more like a cushion. So if it's a zone, like where we get some kind of bounce, I think somewhere in that ballpark seems reasonable, right? Testing old structure is pretty common in markets. I mean, it happened right here. This is a really good example. When you hit that structure as a retest, you know, it's a support resistance level. But yeah, could be interesting if it goes down that far. I will definitely be a buyer. But yeah, when, you know, later on in this cycle, I'll certainly be doing streams about the advantages of actually buying the bear market instead of, you know, instead of not buying it, I guess, and trying to trade it every day, and if that's your only plan, just trading. I mean, that, look, to each their own, but I think it's something worth considering, building up some kind of spot position, because there's a few benefits to that. You don't have liquidation levels to contend with. There's no stress in that method. Also, you have basically you're avoiding having to pay perpetual fees on those buys. So when you're on leverage, you basically every 8 hours or every time there's a funding round, you have to pay a fee on what you've borrowed, basically the leverage. So let's go back a touch. Shackleton says, hey Rick, thanks for the TA. What do you think the lacking alt season this cycle? Oh, what do I think of the lacking alt season this cycle? How much do you think they can still drop? They never really rose this cycle and are down at least bear market levels. Yeah, so what I think has happened is that this bear market, or sorry, let me grab an alt chart. This is, by the way, this is silver today, down like, I think it got down as low as 30% for the day. But anyway, and same with gold. Gold has been correcting off that parabolic move up. We can dive in deeper to that in a bit, but just to go back to altcoins, let's go to, let's just go to, let's see, I've got a chart for it. Others.d, or total 3 ES. That excludes stable coins. It's like basically the altcoin market. Sorry, give me 1 second. There is a giant spider crawling across my wall right now. I'll be right back. I'll show you. Let me take a photo of it and I'll show you the size of this spider. 1 second. Alright, now let me just upload this. Yeah, I really need to clean the back wall behind my computer. There's a bit of dust and cobwebs, but don't judge. Let me just get this sent to myself so that I can bring it up on the screen. We will come back to the alts. 1 second. Give me a second. So I need to message my other account. I took a photo and a video of it so you can check it out. Alright. Let me open up my DMs. There you go, can you see that? So that's like the width of a standard brick, I guess. And yeah, he's a big boy. I'm trying to imagine. Yeah, probably the size of like a softball, a bit bigger than a baseball in like, you know, circumference there. Not bad. Let's see if I can find the video real quick. Sorry, this is a complete sidetrack, I know. Let's see if this works. This is like a movie. Yeah, I'll just save this to the desktop. And then we'll open it that way. Anyway, it's pretty much the same thing. So there's a spider web back here. Daddy long legs. 2 daddy long legs. And then a huge huntsman spider. Yeah. Not bad. Alright. Maybe that's some kind of sign. I don't know if there's any spider crypto coins out there, but let's get back to it. 1 second. Alright. Come to America, dude. Safer here. Thanks for checking. Don't get bitten by that. Yeah, I'll try not to. Grab mama's slippers. Aussie spiders are next level. I'm in Boston. Nothing here like that. Yeah. I think you guys get wolf spiders in the US, which are very similar looking. Like, they're very similar. You got plenty of snow. I've never seen snow in my life. Call the army. Yeah. What do I do? I'm just leaving it there. I mean, he's harmless to me. He's on the ground now near my feet, actually. I really need to vacuum my my place. Let me just get one more photo because it's standing out really well against the white tiles or the lighter tiles. Sorry about that. Sorry about all these delays. It's the spider's fault. One more photo just to give you like a size comparison. Let's bring it up in... Here we go. That's my hand. He's not that big. He's a baseball. No, that was actually an exaggeration. He's, yeah, I don't know what that would be. Maybe more like a bit smaller than a tennis ball then. Yeah, not that big. He's got dust on his feet though. See he's running through all the dust on the floor. I need to vacuum. My bad. Alright. He's near my feet, so I'm just gonna hope he doesn't run up my leg, but I'll definitely know about it because I'll feel it. Anyway, back to the point. Where are we? Okay, crypto total. So with altcoins, it's so dependent on which one you're referring to, because if you go to the total market cap of alts, you can see it's definitely downtrending. Back to the levels that we were hitting. Let me go to the daily and zoom out a bit. So here's the back end. This is basically the bear market down here. And, you know, we've revisited that level twice. Or we visited it for a second time. Then we finally got going. And arguably, we have been in like an upward trend. Now, I think that's threatening to get lost. Like, we're starting to lose that uptrend, so it's not looking great for the total altcoin market. So that's everything excluding stablecoins, Bitcoin and Ethereum. Shout out to Quai for helping me figure out what the ticker was for that. Total 3 ES. And yeah, that's not looking bullish. I would say that this has possibly further downside, especially if it's losing this trend, and it's gonna have to re-stabilize somewhere, just like what happened over here, right? You had like a double pump out of the alts, and then, you know, it lost the structure. So if I could kind of duplicate that idea, it's not going to be like exact, it's just going to be similar, but you see the takeoff point and then the correction down to the floor. If you take that to like the takeoff point like that, and I'm lining it up with the structure that it built. See the trend? So this white line here, this uptrend, was also present last time, just here. And once you lost that, you can see the level of correction that happened afterwards. So could that happen again? I think, yeah. I think it's reasonable to sort of project that. To what level it falls to, I'm not sure. It could fall, you know, it might not fall back to the floor of last bear market, but I think there is some correction on the cards for the total altcoin market. Hopefully that explains that there is further room to fall on alts. Now let's look at some key altcoins though, because I want to show like how, I mean, XRP's a little bit of an outlier because it's such a high market cap. I think it's the third largest crypto on the scene, you know, excluding Ethereum, excluding Tether. Yeah, looking at the high caps, let's look at Link. Link's a good, just classic, you know, blue chip altcoin. That thing, yeah, it's gunning back down to its lows. Here's the back end of that last bear market to this target. So it's a good example of what happened to a lot of alts, is that it double bottomed and then W'd up. But a lot of the best activity happened in 2024 and 2025 for most altcoins, especially the back end of 24. the presidential election bull pump that the market saw. But it was a rough year. Last year was full of volatility, and you can see that this thing crashed significantly, and had a nice, relief bounce off that crash, but didn't quite make it back into new highs for the cycle. And it's back. There's no argument there. It's completely back into a bear market. It's been downtrending since August of last year off the back of that pump. So with that in mind, it's like, okay, where did it get this W actually? This is how you sort of use the Fibonacci tool. Just measuring the rejection. It looks like to me, just eyeballing it, that looks like it recovered back up to the high about 80%. So a 768 retracement maybe. Sorry, 786. So there's there we go. So that's likely to be around the 80%. So that almost fully recovered the pullback or the crash. Not bad. But if I link up on the highs on Link, pun intended, it looks like it almost got in touch with that trend there. Logarithmically more so, but yeah, you can see it kind of reattempted that trend. I'm going to keep that in there because that'd be a significant trend to break when Link decides to come back up. But yeah, that's Link. Let's look at the crowd favorite Dogecoin. Yeah, this ain't looking great for Dogecoin at the moment. Losing that, this happened weeks ago. But basically this trend line here, link up, it's not very uniform, it's a little messy, but you can see that there was some kind of trend that was trying to be established. Maybe it's from this drop point. There's a little bit more, yeah, there we go, that's a bit more uniform. So you've got some major macro pivots off that. This is the weekly chart, by the way. So you can see there was a rising wedge. This is so classic, like bear flag here, very volatile bear flag, correcting and then trying to rise up, creating a rising wedge, and then the textbook breakdown of that rising wedge. That October 10th candle was brutal. Basically put it back to 10 cents. And where are we now? 11.5 cents. So we're pretty much back to the buy zone. This was last bear market's buy zone between 10 and 5 cents, basically. So getting Doge back into this zone, this is beautiful buy territory, if you ask me. Could it go lower? Yeah, of course. Because look at that massive fat gap there. All this level has been unchecked for rechecks off the old. So yeah, there is a case for getting lower than 5 cents on Dogecoin, but I don't think it's harmful picking it up, bit by bit. Don't go all in at once, just collect it. As things are crashing down, this goes for any coins that you think have a future in the next bull market, if or when that comes. There's no harm in picking it up in a declining or a discounting market. If that's $10 a week, like whatever you can afford, just as an idea, just chip in as it collapses. Like chip in more, and the bigger you go in those collapses, the better your average is gonna be. Like if you just sprinkle in to begin with, just light buys, slightly bigger as it gets lower, and then when you feel like you've hit a floor, you chuck in a bit heftier, and then your average is going to be like nice and set up for when the market turns around. Because just look at the history of Dogecoin, the last, basically the whole existence of Dogecoin. It's a series of peaks and troughs, peak, trough, peak, trough, peak, trough, peak. So, this is like day one basics of markets. Like, you know, that it goes up and down in cycles. So you sell the tops and you buy or accumulate the lows, the troughs. So this would have been a whole buy zone. These shaded areas, these shaded rectangles are definitely buy zones. So historically speaking, it has been staircasing up, but now it's like, okay, do we start to step down again? I guess that's yet to be seen, but pay close attention to 5 cents, essentially. Start getting excited if we get below 10 for buying, you know? But, you know, have money on reserve in case we do lose 5 cents, because, you know, those prices are pretty good, historically at least, in my opinion. And that's Dogecoin. What else have we got? What's just like just a typical... I mean, Dogecoin's cool. What about Shiba? We'll look at Pepe. We'll look at, you know, Jasmy. All of these different ones. Okay, where's Shiba? Where are you, Shib? Do I even have a Shiba chart? Maybe it's in this one. List. Okay, I'll just type it in. Shib crypto. Take off the perpetuals. Okay, Shiba Tether Binance. This is a good chart. Okay, Shiba well back into its like historical buy zone. So if you like Shiba, picking it up in this gray rectangle is historically a good idea. It's also got one of those, like Link, it's got one of those macro downtrend lines. And, you know, unless Shiba belongs at 0, I think this macro trend line will break one day. So whether that happens, you know, later on in the next bull, potentially it'll get a big breakout. Even just visiting this high would be really beautiful for like returns on whatever you pick up in the gray box over time. But I mean, just let's say we buy on the high side of the gray box. Let's say our average sits somewhere in there. Going back to just that orange line returns you like 400%. So you'll 4x your money if it does that. It's not, I don't think this is outlandish to just target old highs. Price discovery would be even better, like getting up into, you know, size that Shiba's never been before. Even better, right? Same for any altcoin. We never, I would argue that this season didn't really have an alt season in this crypto cycle. We had more of some momentary pumps, but, you know, for the most part, a lot of the older coins didn't go back into price discovery. They were just, you know, like a shadow of their former glory, so to speak. So, I mean, Shiba's a good example. Look, it came up here. It didn't really come close to its old high. So, lower high, downtrend on the macro. I want to quickly look at Ethereum just so we can check that off as well. Just like Bitcoin, downtrend, you know, set in an all-time high this one set it in August of last year, and it just keeps copping lower highs on the higher time frames, right? It just can't seem to get the ball rolling. The buyers aren't showing up to break those highs, to break that structure. So until that happens, it'd just be like a case of, you know, if you like Ethereum and you think it deserves to be in the next bull market and go into price discovery one day, it's worth collecting it as it corrects down to wherever the floor may be in this bear market. So that's ETH. As far as targets go, well, it seems to have checked this low here just recently. See that? It's basically double bottom so far. So there may be like a bit of relief as it tests that support, same support level, you could get a reaction and get some kind of bump that comes up. Maybe that's an idea. I would set a stop below that trend line or below that support line, just in case it's wrong and it does continue to correct shortly. But that would be like more of a, you know, almost like an intraday trade. You could say it's already sort of happened, but yeah, we'll have to see how that unfolds. But basically, looking for short opportunities in this kind of environment will treat you a bit better than trying to long it, trying to pick a big pivot point and hold it for days on end. Those kind of ideas, as you can see, look, if you bought here, it only came up so far. If you bought down here, you know, you basically have to have a very local take profit idea, or at least trail it with a stop loss so that you don't end up round tripping again. So on the other hand, on the contrary, you can wait for those rallies to roll over and short the crap out of them. And then the reward for doing so is pretty significant. Now, of course, like trading intraday, you just do whatever the smaller time frame trends are doing or indicating, right? Like if I go below the daily chart, so if I go onto like the hourly or the 15-minute, let's jump on the 15-minute on Ethereum. You can see there are moments like, look, this was all uptrend. This is beautiful. This is like multiple days actually. So hours and hours of uptrend here. So yeah, just because it's been a downtrend on the higher time frame doesn't mean that there aren't long opportunities as well. And vice versa. In a ripping bull market, there's going to be days that you can short. So it just really, context is everything. The context, the time frame context is everything. Thanks for the shout out, says Kwai. You're welcome. The alts should have a similar chart to the total 3. Yeah, total 3. Yeah, that's like kind of everything excluding the top stuff, I believe. Thanks, Rick. Waiting for a dead cat bounce on Bitcoin with some alt rally. Getting nervous now. We won't have much of a bounce before full on bear. Yeah. Just like I was saying earlier, like the huge line in the sand is that $74,000 level. So basically this one about there, 74k, which is an SR level. So resistance, support over here. There was the resistance check. There was the support check. And, you know, we're in the neighborhood of going to go test that level. So 74, I think, is on the cards. Right now, we're sort of doing a lower time frame recheck of this wick low. I'll show you on the daily chart. It stands out a bit better. But you can see this number of days heading to that point, to this point. And then we've spent a number of days bouncing off it and getting higher. So this is why this is a significant pivot. It's basically a swing point. If you were to give it a label, like these are swings. This here, on this, at least in this time frame, in this contextual time frame, this is not a swing. This is just basically the noise of it swinging from this swing point to this swing point. You know, all the basic bumps and noise in between getting down to those swings. But yeah, a swing is basically the extreme pivot points on any given trend, like when trend, especially when it changes direction. So, you know, if you go down to the 5-minute, you're going to see the 5-minute chart swings. Like, you know, here's a swing point, there's a swing point, here's a swing point. You know, swing points, double top swing point. So this is like a double bottom, that's a double top. Yeah, you're picking out the most key pivots for that time frame. And that's pretty much what I mean by that. Look at this structure at the moment on Bitcoin. You've got like a bit of you've got at least a clean trend up on top. This is only the 5-minute chart, by the way. But I'd be tracking that. Keep that on the screen, that trend line there. Breaking that could produce a nice trade to the upside. But that's a big if it breaks that. It's not really suggesting that right now. It's actually kind of bumped off it for a third time. So here was the first time, there was the second time, and then the third was it basically respecting that trend, and it's not wanting to break up higher just yet, but you can track its progress. It could be moving back down to recheck these lows, because this is where buyers stepped in at that point to bring it up. But yeah, we'll see how it behaves. Let me get rid of those moving averages. Okay. What's up, King Mummy? So let me delete this stuff. So that's Bitcoin 5-minute. Sorry, don't mind me. I'm just bouncing around timeframes and charts here, but I'm going to go back to Bitcoin. Let's try to stay on topic a little bit. Bitcoin's still the king, has never changed. Bitcoin's been the king since the birth of crypto, right? The crypto market, Bitcoin has been the dominant coin. So it is worth diving into it the deepest. But yeah, you can see on the daily perspective, this was so textbook. Like this is, so you might consider bull flags, bear flags, pennants, or rising wedges, all of that kind of stuff is like your textbook retail trader, chart pattern. Now, because there's a lot of retail involvement, these patterns show up pretty frequently, and people trade them as such. And whether you want to call this a flag or a rising wedge, I tend to lean toward the rising wedge idea, but I think calling it a flag is just as valid, in my opinion. It's basically a parallel. So the whole point that both of those, whichever pattern you want to call it, the point is that we fell into it pretty severely. We consolidated sideways, and now we're falling out the bottom end of it. So that is a continuation pattern. Nice and simple. Now, whether you want to call this the drop point or this the drop point, I would, if you want to go to the extreme, let's use the all-time high, and we'll target, we sort of did this earlier in the stream, but if you target that with the breakdown point, that might suggest that Bitcoin could hit roughly 44k, 45k, and that's kind of like, some people take that measure from the top of the flag or the top of the consolidation, but the way I've seen it many times in textbook diagrams is this. It's the breakdown point of the flag, or the rising wedge, whatever you want to call it, and targeting this level here. Now, does that harmonize with anything to the left? Any key structures? Not really, not sharply. There's some, but it's not. It's more of a zone in this case. You can see basically between. So rather than do that, let me just draw this out as a rectangle. It's more of like a zone somewhere like that. So with that, you're hitting this old high, this old high, this low. So basically the top edge of that zone is another pretty significant SR level. Let's get that in there. Like that. So maybe we wick through it and that gets us the measured move. Measured moves are like a loose, I don't think they don't suggest precision, like they're not supposed to be to the dollar precise. It doesn't mean they can't be precise, but it's not, you shouldn't have high expectations on it being to the dollar or to the, to the decimal place. It just gives you an idea of the potential of what it could achieve. But yeah, this is kind of a, it seems like a big call, like it's like, oh, I doubt it gets that low, but you wait for it. Like, Bitcoin's full of surprises. Crypto can be full of surprises. Look what just happened on silver. Silver looked like it was entering a new paradigm, and look at that. I mean, you could argue that the parabola hasn't broken, even with a significant correction here, or pullback, crash, whatever you want to call it. It still hasn't really broken the super macro, or the higher time frame trend yet. But yeah, like if you were to link up all that activity, it's still, I still think it satisfies being on top of it, and it hasn't broken that parabola. But bloody hell, it has corrected very heavy off that high point. You could, I think, probably the highest correction we've seen, or like the fastest and deepest correction we've seen in a number of years, in that short amount of time. That was a big dump out. But yeah, silver. I'm gonna have to, let me give a chuck a title on this chart just so I can quickly refer to it. Whoop, silver. Keep that in the middle at the top. That's the cool thing about the anchor tool, is that the text follows you wherever you pull the chart. It's going to stay locked on that position. Just a quick little hint. And that is this button here, the anchor. Anchor the drawing. I'll do the same for gold actually. Let me save that. Chuck that somewhere in the middle at the top once again. Yeah, that's good enough. Lock that in. I mean, look, even though this correction has been nasty, like this pullback, I don't think it has broken once again the uptrend. To me, that looks like it's still in this healthy parabolic arc, still very vertical. And even just this part, measuring that arc, you can see it's still within the bounds of it. It hasn't come out the ugly side just yet. So maybe that's to come. No matter what the asset, even gold and silver, if you get such a vertical move like that, it's unsustainable. Just think of market dynamics, How many people pile in and line up to get in on the euphoria? Heaps of people, lots of people. And, there is a rush to the door, Everyone has to try to get out of the door at the same time. That's my open door. But jump back a couple of time frames. So that's, you can see demand, like whenever you get a long tail on a candle, especially on the bottom side like this after a correction, that is indicative, or that is showing that there's buyers stepping in at that level. People are happy to buy it again, at this point. So long tails, just like long tops, like, you can see there was some pressure here, pressure on this wick here, and that's sell pressure. Do we get the same on crypto, Bitcoin? And yes, I'm sure it's evident in a lot of places. Like, look at this buy pressure right here. Look at this sell pressure, the tops here. Wiki, very wicky up here too. There's a wick there. Buy pressure here, which, you know, that Bitcoin held ground for many weeks here and causing that flag. But unfortunately, buyers just didn't show up through this zone. I think they were busy trading the metals like gold and silver recently, in recent times. And also, like, we know that Nvidia, the stock, has been doing phenomenally in 2025. I haven't checked it recently though. Let me just have a look. Nvidia chart. Let's zoom out on the weekly. Yeah, you can see Nvidia has just been going parabolic. There was that tariff war, like the tariff situation. Huge correction. I don't think many things survived that correction when all of those tariffs were getting suggested by Donald Trump. And then, but the recovery was swift. This thing bounced up amazingly, and it is still a bull market for Nvidia, in my opinion. There's no change there. A lot of money flowed into Nvidia. Let's just quickly look at company's market cap. So Nvidia, $4.6 trillion market cap. Gold is $34 trillion. Silver, I'm sure, probably hit 5 back at the top. But yeah, Bitcoin's slid back down to 10th spot, 1.6 trillion. But yeah, I mean, look, top 3, this is where all the money's sitting. Even Google, 4 trillion. Like, so much money has been sitting in these ideas. The Mag 7, you know. And it just goes down the list. I'm guessing these are, okay, these are like, yeah, ETFs. ETFs highlighted in this blue color. There's a metal again, platinum. Ethereum's down here, palladium. Yeah, this is the top 100 assets on the planet at the moment. Coca-Cola's in here. McDonald's is there. Yeah, you get the idea. It's a pretty cool website, this one. There's Coca-Cola. It's 51st position. Back up the list. I'll put that in the YouTube chat if you want to visit it. I'd bookmark that website because it shows you basically where the bulk of the money is, and it's usually always going to be in gold. Gold is so giant at the moment. $34 trillion. Second only to, like, you know, silver is only second at 4.7. So you can see how it's dwarfing the rest of the assets, you know, the investable assets. So I know that all the crypto community is like preying on some rotation from gold and silver, and even some of the big tech stocks to come into the crypto market. That may be the case. I don't know if it's going to happen anytime soon. Seeing is believing, so if it happens, it happens. But I think this thing has further to correct. Now I'm going to let me bring back a chart that I've shown in prior streams, and that is on the Bitcoin index here. So that is, if I go logarithmic, you can see all the annotations down here. You've got the first, so all the halvings are in orange, all the bear market lows are in red, and all the all-time highs are in green. And you can see the distances between them. There seems to be like some kind of rhythm with that, at least for now. And this is, what's this? Like, this sort of started becoming evident around, you know, after the first halving, we got this rhythm. So it's been like, what, 12, to 22. That's been 10 years, and then 22 to now 26. That's like 14 years worth of activity, if my maths is correct there. So 13, sorry, not coffee hasn't kicked in yet. But anyway, you get the point. So using that, projecting out, if we're gonna keep these distances uniform, I've already projected that the bear market low will come in sometimes in the fourth quarter of this year. So right here, it's basically late October of 2026. The fifth halving is projected to come in around June of 2028. So that's like, you know, about midway through the bull market, the next bull market. And then our all-time high comes in sometime around September of 2029. So just before the turn of the decade. So yeah, we got a few years to go until that. I still think, relatively speaking, if our bear market lasts like the sort of 12 months that prior bear markets have lasted, then we are about a third of the way through. So if you take the distance from the top to now, and you just repeat that 2 more times, you've got the full bear market. So we're 1/3 through. Not too much longer to wait. You know, I don't know where 2 and 3 go price-wise. We've sort of done projections on it, but you know, we very well could hold 74,000. We don't know. We just don't know. I mean, there's probably some bullish ideas saying that the bear market's not going to be as severe, and we do hold that level, and it takes us some time to establish the floor. You know, maybe it's more something like this, where it comes up, gets a relief, fails, comes back down and double bottoms, and then, you know, the bottom is in, so to speak. Or maybe it happens like, you know, over... Because if this is supposed to be the low point of the market, like there, maybe this does crash through a little, and then we get like a W style, like double bottom bear. I don't know. So many ideas of what it could do. But at least we're getting some outcomes. That is the beautiful thing. Because we've been stuck in this like rising wedge or flag pattern for weeks now. It's been basically 2 months, something like that. How many days has it been since we entered it? Say it's like roughly from there. I just measure it with this tool. So like, where do we truly fall out? Like, I'm basically here, 64 days, it's like 2 months. And then it took a number of days just to back test it as well. So these things on the high time frame, sometimes these big structures take a number of days to actually properly get going. But, you know, at least we're getting some answers, because, you know, this could very well have been a big W as well. Like, if this didn't get rejected here, you know, I've seen Bitcoin has done that many times where it's W'd back out, like here, see? W'd back out. Big fat, I mean, this is many W's, but, you know, you can sort of see the idea of it being like that. Big one over here. This is like a triple bottom. But yeah, I love the macro. Macro, like high time frame, is a bit cleaner, a bit clearer. The picture, the signal gets clearer the higher you go. Once you start getting down low, like to the 1 minute, look how noisy that is. Like, some people find it to be easier to trade and scalp. Like scalping, sure, but you know, where's this? You really going? I have no idea. It's just, when it's like this, it's like chop. It's just a range, it's just a bunch of volatility. You don't really know where it's gonna like sort of pan out and travel. You can sort of speculate on it, but yeah. 14 exactly, Quai. Well, let me catch up on these Quai messages in here. What up, Chief? Measured moves, hell yeah. It's like banana bread at work, dude. It's been over 40 years that it took a percentage hit that big in one day. Yeah, percentage is not what's unreasonable. It's how short of an amount of time it took to do it. Yeah, it's leverage. Leverage is the devil. Mama said so. Okay. Yeah, leverage is pretty nasty. It's dangerous. It's a dangerous game, leverage. I'm not good at it. I will be the first to admit it. But it would be really nice to I think the key is not the leverage that's bad, it's you. It's you chopping and changing strategies. You not being careful with risk management, not having a plan. I've done a lot of my involvement in perpetual futures has been no plan, just kind of like winging it. Oh, this looks like great momentum. I'm gonna go in on this, long it, and then it kind of goes up. I've got no real targets in mind. I'm just sort of riding it, trailing it with a take profit, that kind of thing. But it's not really trading. It's not. I mean, it is trading, but it's not. It can be so much better with a proper plan in place. You know, structured approach. Everything should be set up before you even open the position. You know, your stop losses need to be figured out. Your take profit levels need to be figured out. This all needs to be premeditated before you even go into the position. Plot it out, have a plan, stick to the plan, and repeat it. Repeat it. Stay true to the plan and loyal to it. Don't flip flop and change plans, because you know, where's the consistency in that? But you got to let the strike rate and the win rate play out over time to get the benefit of using that strategy. So find a strategy that works for you, something that you like, preferably something with a high win rate that is proven and back tested and all that, and just repeat that method of trading or scalping, whatever you're trying to do, and try not to break the rules. Don't move stop losses. Don't delete stop losses. Just let them. You know, if price is going to stop out, well, that's you following your rules. If you're stopped out often, there's something wrong with your entries. You're getting in either late or, you know, something's going on. You have to analyze yourself. Like, why did the trade go wrong? Don't blame the market. It's something to do with your decision making, usually. Not saying that there can't be wacky days that, you know, go outside the norm, like, you know, Black Swan or some pump because someone tweeted something. Like, that happens, but in natural market flow, these strategies work off that, the more natural day in, day out kind of activity. Yes, thank you, Quai. Preaching. Preaching to the choir, I would imagine. So this is a little bit of a telltale, but we've only got 8 people viewing the stream. That kind of shows you that the retail interest in crypto right now is almost non-existent. There's no one really showing up, like, trading at the moment, I would argue. They're busy doing other things. There's other things that are happening. I know that there's a lot of attention on metals at the moment, silver, gold, but that is classic, and it's gonna be that way until the floor is in, and then some, even after the bottom is in. Like, if you look at the last bear market of Bitcoin, think about the psychology that happened in the bear market. Like, people got smashed on this first leg. You know, so much of retail would have left the building. You know, through here, the people holding bags were hoping that this would turn around, just like arguably recently Same thing, you know. And it very well could have. It's not like you know, it's not 100% on the cards that just because it's doing a pattern that it has to do this or has to do that. But when you get confirmation, like, I mean, this is pretty telling. The fact that we fell out the arse side of it and it's very textbook, it's just been similar to this, similar to that action. So if we're treating this potential bear market, I think it is a bear market, I think the top's in. If we're treating that anything like the last time, that means we're kind of halfway through the price correction, you know? Which means we end up coming down somewhere like, you know, around just below 60 or something like that. Something, even maybe into 40. I know I've given a couple of clear levels. We were playing around with measured moves, that kind of thing, which is a good start at least. But yeah, nothing's bulletproof, nothing's perfect. You just try to do the best with what you have. Technical analysis is not like meant to give you definitive answers, like that are, you know, 1 + 1 = 2. It's not like that. Technical analysis is supposed to give you a probability, some kind of probability. Like, is this what scenario is more likely to happen than the other scenario? Like, and you're just working off that. So it gets you a lot of the way there, but it's never gonna be 100% perfect. Let's check. No, I've been blabbering on about that for enough. Let me just check one thing, and that is, I'll hide that line as well. The Fibonacci situation of the whole cycle, like of this whole bull market, which started arguably at the back end of 2022. Let's take it from the floor all the way to the all-time high, and see, we're kind of dealing with the 382 level right now, the fib. Right there. We sort of, I guess if you go back to the daily, we got a bit of activity off the 236. It wasn't very long-lived though. Kind of fizzled out and down we went. That was like a rising wedge or a bear flag. Kind of what's happening on the higher time frame, to be honest. But yeah, these bear flags show up in a correcting market, just like a bull flag shows up in a rising market. You know, it's the same way. If I invert the chart, same thing, the outcome. And they're everywhere. Like, look at this situation here. You know, came up, consolidated, broke out. Of course, this is upside down, so that's a bear flag too. But you get the idea. You can see that the 0.5 fib level lines up really nice with this old high here, and arguably, you know, this probably front ran a little bit. It didn't quite get down to that same high level. It did bounce a little sooner, but it's close enough to say that was why it bounced off that, because it was an SR check. So this is why my next point of interest is that level, that same level. You know, I'll make a stream about it when we get down here. This could happen in a couple of days. It could take a couple of weeks. I don't know. I'm not sure, but I still think, yeah, we are due to come down further, in my opinion. And you know, I'll totally admit it on live stream if I'm wrong and it's gone back up and punched up, and we're getting some, you know, break of the Bitcoin 4-year cycle, you know, that kind of thing. But yeah, when you're wrong, and you just have to face it. But for now, it's just, yeah, it's playing out as the cycle suggests. All right. I think that pretty much covers it. I'm gonna wrap it up. How long's this stream gone for? Let's see. It doesn't tell me like it used to. I'm guessing like an hour? guessing like an... I don't know why it doesn't have a count like it used to do. But anyway, what are some of the analytics? We've got 43 views. That's cool. So individual viewers like tuning in and leaving. 74 minutes. Okay, over an hour. That's cool. People stick around on average for 13 minutes on average. Of all those 43 people, most people sort of fall in that 13-minute. So this is kind of why I was uploading videos of analysis that were, I'm trying to aim toward that 10-minute mark, because most people will, you know, stick around if a video is only 10 minutes. Like, oh yeah, I can even put it on double speed and watch it in 5 minutes. But yeah, you should be able to get most ideas out within the space of 13 minutes. But I'm waffling on. I'm like sort of covering the same ground as I always do. All right, I'm gonna wrap it up. Thanks a lot, guys, for tuning in. Oh yeah, I can see the live timer now. They put it up in the top right corner. And hopefully some more decent candles happen and there'll be more to talk about. But for now, I'll sign out and have a great night, have a great day wherever you are, and I'll see you on the next one. All right, cheers.